If you're a day trader, while other normal people are celebrating the new year, you may be dreading it just like me because taxes! Taxes.
Taxes!
I've been a full-time day trader living in Vancouver, Canada for many years now, and I've gotten tons of requests to go over how exactly do we do taxes for day trading income so we do not, God forbid, have to deal with the CRA, Canadian Revenue Agency. After all the spendings on COVID relief and the money printing, the Canadian government needs to collect their cash from somewhere. This is something I've heard from my very own CPA and other friends in the tax industry. This is why it's extremely crucial that Canadians who trade stocks, crypto, future, or any securities asset truly understand their personal tax implications so you do not get slapped with a huge tax bill in April. In this video, I'll be discussing day trading taxes for Canadians and going over some key topics for traders, such as is day trading income considered business income or capital gains? The key criteria the CRA looks for when deciding whether your income is considered business income or investment income. If you made a lot of money from day trading or swing trading in 2021, well, that's music for the CRA. It really doesn't matter how much money you make. What matters is how much you get to keep. And that's the reason I'm making this video, to help you better understand day trading taxes in Canada and save more of your hard-earned money. A lot of time, research, and of course, my personal experience as a full-time day trader went into making this video. So if you appreciate my efforts, please make sure to drop a like at the bottom of the video. That'll tell me to make more educational videos like these in the future. First, let's get the most important question out of the way here. Is trading income considered capital gains income or business income? The reason it's very important for you to differentiate the two types of income is because capital gains is taxed way more favorably than business income. Business income is just like employment income, it's 100% taxable, meaning if you make $100,000 from trading and that is filed as business income in 2021, then you have to pay around $26,000 in taxes and your take-home income is only around $74,000. However, if you are filing capital gains income instead on that same $100,000, that means 50% of that profit is tax-free. So the true taxable amount is only $50,000. That equates to paying the CRA only $7,600 in taxes, and you get to keep the remainder of around $92,000. As you can see, these two tax filing income types result in very different take-home profits here. I'll just tell you right here that all of my personal income, which is 100% from day trading, are considered business income. And they are 100% taxable. So yes, every tax season is just brutal. But this is not the end-all be-all. There are actually many benefits of filing your trading income as business income. I'll share more about this later on in the video. To determine whether your personal trading activity falls under business income or capital gains, here are 4 main points to consider. But before I go there, here is a quick disclaimer.
I am not a financial advisor nor a CPA. I don't know anything about taxes. All I do is hodl, meme stocks, YOLO calls, and Bitcoin.
This video is for entertainment purposes only. Make sure to talk to a tax professional to figure out your personal situation. Don't just listen to some guy on YouTube talking about taxes. Wait, I'm not even some guy on YouTube. To determine whether your personal trading activity falls under business income or capital gains, here are 4 main points to consider. How substantial is your trading income? Basically, how much money you're actually making. Is trading your only personal income source? How long do you hold the securities for? And how often do you place your trading transactions? So let's go over the first question. Essentially, how much money you're making from trading. If it's just a couple $1,000s, then the CRA wouldn't really care, as that's probably not worth their time pursuing. However, if you're making high five figures or 100,000 or even more from trading, then that's substantial, and it's most likely going to be considered business income, and that will be 100% taxable, especially if you do not have any other employment. And that takes us to the second question to consider. Is day trading or swing trading your only source of personal income? If you have an employment income making over 6 figures, and you have some short-term trading to supplement your income on the side, making around $10,000 to $20,000 a year, then perhaps that trading income could be counted as capital gains. Because $20,000 from trading is not as substantial or as much as your other income source. And second, you have a full-time employment income. Again, just pay $300 and check with a CPA about this. I am not a CPA. I only got a B in math, but I did get an A in bad jokes. So that means if you don't have any other employment income to declare and you only have a trading income of $100,000 or even $50,000, you bet the CRA will see your trading profit as business income. Okay, now comes the third and the fourth question. How long do you hold the securities for, and how often do you place the trades? I think this question is very easy to answer for day traders. You open and close positions within the same day. That's why we're called day traders, not week or month traders. Sometimes we even hold the securities for hours, minutes, or even seconds. So ask yourself about this. Do you place trades every single day like a day trader or several times a week like a swing trader? Then that income will be most likely considered business income because it's very difficult to justify to the CRA that the intention of these short-term and frequent trades are meant for investing. Personally, as a day trader, I do participate in the market every single day. And most days I make more than 10 trades a day. And there are some times where I make 30, 50, or even more because day trading is my business. Whereas if I was an investor claiming capital gains income, I most likely would just make 1 or 2 transactions per month. An investor isn't making buy or sell transactions every single day and is usually holding for a much longer period of time, for weeks, months, or sometimes even years, because the security is meant to be an investment for the potential long-term growth of the company, not as merely a vehicle for him to take advantage of the short-term price fluctuations. With that in mind, in my personal opinion and from my own experience, the first 2 questions, how much money you're making from trading, and is trading your only personal income source, these 2 are still the most determining factors. After all, it's probably not worth the CRA's time and resources to pursue somebody making $100,000 from employment income and day trade on the side to make $5,000 or $10,000. I have a feeling if you're searching and watching videos on YouTube about day trading taxes in Canada, then first of all, congratulations. That means you probably made some decent profits in 2021. That also means your trading income will be most likely fall under business income. But don't worry, there are many tax deductions and benefits of doing so. Since your trading is categorized as business income, not capital gains from investments, that means you have tons of business write-off opportunities. Some common ones are trading commissions, trading education program, scanner fees, internet, mortgage interest, and the list just goes on and on. Check out my video where I detail all my day trading expenses to learn more. Essentially, you can deduct all of the expenses you spent to generate that trading income. So if you made $100,000 from trading and spent $20,000 on the business expenses, then only $80,000 of that profit is taxable income. All of the common tax deductions I mentioned earlier are just the most basic and legal strategies to reduce the total income taxable from your trading. In the next video, in part 2 of day trading taxes for Canada, I will be discussing the more advanced way many full-time day traders can save more money on taxes. I've been day trading for over 7 years now, and I've learned so much along the way to be more tax efficient, such as business structures for trading, money management in TFSA, RSP, and capital gains investing for day traders. I'll be covering that in part 2 of this video. So make sure to subscribe and ring that notification bell so you will be notified when that video is ready. I'll link to some more tax resources for you in the description below. Thank you guys so much for watching as always. I'm the Humble Trader, and I'll see you guys next time.